India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, start of a new week. And it's an important week because of what has happened on Friday. I mean, Fridays are turning out to be sort of important. I mean, there was that 5th of August Friday when markets kind of capitulated. That seems like a distant dream now. So we're starting on a good footing. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Surbi and Nigel. Guys, good morning.
Hi, morning guys. That was a manic Monday, I thought. But anyway, I think the Fridays and the following Mondays end up being pretty eventful for markets. That's what's happening. But let's say we're ending the month in not such a bad position, despite all the topsy-turvy and the up and down.
Well, when you started off the month, everyone was wondering whether we are bracing for a sharper correction. Now we're talking about fresh all-time highs. So in a matter of a few sessions, that's how things have turned.
I mean, we say that cycles are not years and months.
Yeah.
I think they're weeks.
Now they're weeks.
And it's so fast, right? I mean, the change in perception and how markets take it. So let's kind of rewind the clock back and tell you and take it from where we left off on Friday. And what's important from Friday? What's important from Friday is Fed Chair Powell pretty much promising and leaving absolutely no room for doubt that rate cuts are coming. And this is, Jackson Hole's speeches, and we were talking about this last Friday as we went into that, his speech. They're rarely eventful. They're rarely market moving in that sense. But this one was. The last one, I think, was 2021. Well, his key message were twofold. He said Fed, and I quote, will not seek or welcome further cooling in labor market conditions, which means, they're not going to wait for another disaster of a jobs report to start to act. Second, he said the time has come for policy to adjust. And I think this is pretty much as clearly as they come. I mean, a message, I think he could have might as well said, well, I'm cutting rates by 25. So September meeting, markets are at 25. It's a toss-up. Some are saying 50, but more likely than not, it's at 25 basis points, the start of a rate-cutting cycle. Equities naturally responded. The S&P was up 1, NASDAQ was up 1.5, and of course, the small-cap index in the US was up over 3%. Again, I was talking about, in a way, in a reverse 180-day about-face type of reaction to what happened in early August to what happened now. Pretty large moves. I mean, for example, the NASDAQ futures crossed their 55-day moving average. They're above the psychological resistance at 19,700, which basically portends more gains as we come into this week for the U.S. The 10-year yield was down 5 basis points. We're at about 3.8, but you also had the 2 and the 5-year, which basically tested month-to-date lows. The dollar index from 103.5 a few days ago, it's back at testing. I mean, it's essentially looking at maybe into the double-digit handles. So 100.68 and the multi-year supports at about 100.5. We almost tested those supports, and then there was a bit of a bounce. Oil prices jumped about 2.5%. We're back above $79 a barrel. Remember, commodities, not just oil, but everything, global commodities are all priced in dollars, US dollars. And when dollar falls, prices rise. I mean, that's the reaction function. You also have a bit of news flow over the weekend in terms of U.S. elections, and this is going to gain importance as we go into the next couple of months. So it was looking like, Trump was on the back foot with Kamala Harris replacing Joe Biden as the Democrat presidential candidate. And so she was riding this big wave. She's still doing very well. They're neck to neck. It's a toss-up, basically, if you go by polls. But you basically have a very popular independent candidate, Robert F. Kennedy Jr., endorsing Trump. He basically suspended his campaign. He was polling about 4.5% of votes nationwide. And he's one of the most popular independent candidates in decades. And him throwing his weight behind Trump basically gives, puts Trump perhaps a little ahead. We'll have to wait for actual fresh polling through the course of the week to see whether that is the case or not. But it was sort of, the question is, have we seen in a way peak Kamala Harris? And, you're basically going to see a more even kind of sort of polling and coverage, etc., from here on. So just to circle back and leave it off as far as levels are concerned, it's not very different. It's a nifty upside level. Of course, I've been saying this for about 6 or 7 trading sessions. We seem like it was looking like we had a path to all-time highs looking clearer and clearer. So 25,078 is the all-time high. for the Nifty. Supports come in at the 40 hourly exponential, which is 24,692, and then the 20-day moving average, which is 24,544. They are, some distance away, though the hourly average is close by. Bank Nifty ended Friday with a minor cut. It was a sort of negative sort of day as well. It was a red candle, which is not very positive, but it's been the weaker of the two indices. The falling resistance line at 51,150 will be the immediate resistance. I think that should go. And above that, you're looking at the daily upper Bollinger Band, which is 51,897, 51,900, I mean, roughly. That's essentially the next sort of target. And supports here come in at the 20-day moving average, which is 50,685, and the low, which comes in at 50,333 again. I mean, these are, for the Nifty Bank, they're not very far away. The supports, they're around. But let's hope the Bank Nifty is also kind of able to bulk up a little bit and pull its weight. On your screen, the open, about 50 points. It was on Friday when you looked at these US markets and the reaction in dollar and the yields, etc. It looked like a very large start. It's not. I mean, it's a more measured start, which exactly is not a bad thing. You've been adding 30, 40 points every day for the last few sessions. Friday was quiet. So, I mean, I think that'll do. A slow and steady march upwards, I think, is perhaps better than a fast and furious rally a day or two, which then kind of starts to fizzle away. So it's a more measured 50-point gap up that you have on our hands. Surabhi.
Absolutely. Prashant, I guess, it wasn't entirely new. The market was anyway penciling in a September rate cut, right? And the comments only reinforced that. There was no fresh shocker in terms of how the Fed chief is thinking. And maybe that's why you're getting a more measured start across Asia. This morning, just to reiterate the comment, to go back to the central theme, what we are really focusing on today and what markets around the world have been focusing on is the Fed chief saying, two things. He said that my confidence has grown that inflation is on a sustainable path to 2%, which was questionable in the earlier commentary, the previous policy meeting. And then he went on to say that the upside risks to inflation have diminished and the downside risks to employment have increased. And then, of course, he went on to exactly cue for a September cut. However, look at Asian screens this morning. So it's not all it's no tidal wave of green. Markets are mixed. Singapore's a little flat. Mainland China is not doing much. Hong Kong's actually started out positive. But you have Japan down. So it's a mixed picture across Asia. That's what we're getting at this point in time. But yes, building on those gains, you can safely say. Now, what's happening in the Middle East has stirred up oil prices. Remember, in the middle of the week, oil was falling to 76. That's Brent. Now we're talking about prices coming back to closer to 80. So what happened over the weekend? Some 320 rockets fired by Hezbollah onto the Israeli side, and in a preemptive strike, Israel kept on pounding with airstrikes. So basically, according to a lot of the commentators, this is the biggest escalation we've seen in the last couple of months. It's been ongoing for a while, but that's why even the oil markets are taking a little more note, because it's the size of it is increasing, and those airstrikes are happening in Lebanon. Let's not forget that. Anyway, back to our markets, the fund flow picture. Remember, the data has been skewed very heavily because of all the blocks that are happening. It's block season big time. FIIs were buyers, almost 2,000 crores. Domestic institutions were buyers to almost to an extent of 2,900 odd crores to be more precise. So the fund flow picture is not bad at all. The blocks are happening. Let's just recap the distance from the peak. Will the bulls prevail, and will we get that all-time high? If not today, but later this week. We're not too far away. Nifty 1% higher, the mid-cap index 1.2%, small cap also about 1.5%. And the bank Nifty, that's the one that has to travel the most, 4.5% from its peak. A lot of index changes, by the way, both here at home and global indices. So back home, NSE has made the official announcement. BEL and Trent will come into the index, the Nifty 50 that is, and Divi's and LTI Mindtree will make their way out. No word on Zomato. The market's been, of course, toying with that idea of Zomato in F&O and then Zomato in Nifty, but we have to wait on it. These changes are effective the 30th of September. And FTSE has announced a whole range of changes to its indices as well, to the all-world index and then to the all-cap index as well. The changes to the all-world index are on your screen, about some 13 stocks which get added. So we'll watch out for any further excitement, any trading bounce on some of these names. But it's been sort of doing the rounds anyway in the market, so perhaps on expected lines. And then there are 48 additions to the all-cap index as well. Last but not the least, keep an eye out on the Adani group, especially Ambuja Cements. Remember, that was a big headline on Friday with the block happening. And guess what? It is GQG Partners once again striking their sort of affirmation and their belief, because among others, they were the buyers in the blocks that happened on Ambuja on Friday. So lots to watch out for, lots of individual stock-specific action. But I guess the setup doesn't look too bad, Nigel, overall.
Well, that's right. And it appears that Powell's speech has set the bulls, talking about fresh all-time highs again. So Powell's speech could practically take the Nifty towards those fresh all-time highs, powering them in that direction. Well, the geopolitical situation is still a little bit fragile, but the Israel stock market was open yesterday, and actually that market went to fresh all-time highs. So hopefully for the good of, of humanity, for the good of financial markets, for the good of everyone, hopefully there is de-escalation on this entire geopolitical issue out there. And this week, well, things will rev up towards the second half of the week because on Thursday, we'll have the August monthly expiry that will play out. So that's why we'll see some bit of volatility coming in there. What do the FIs do? 7,000 long, 7,000 short contracts. So the long short positioning doesn't move much, where they are mildly net long with close to 52% of their positions on that side. Even if you look at it at an absolute basis, both the FIs as well as the clients, they remain net long with close to 35,000 contracts to around 25 to 35,000 contracts on the long side itself. So that's par for the course. Well, what about the PCR? In Friday's trading session, we made this point. It's moving towards the upper end of the range. Now, it cooled off a little bit because we had a day of consolidation on Friday. The PCR is holding at around 1.27 odd, more or less, somewhere in the middle of that broad range that we've looked at. Two strikes are fairly active. And given that it's the monthly expiry, we'll keep an eye out on these strikes as well because these contracts will expire in the next few sessions. 24,800 call as well as put. You put the premium together, the rough premium is around 250, 260 rupees odd. So the sense you get is that maybe there's a bit of a strategy that's playing out here, which is known as the short straddle. That's you write the same strike call as well as put, pocket that 250 rupees odd, and gets you a broad range. So on the downside, you're looking at the 24,550 odd mark holding out. On the upside, it'll be 25,050 going by the options data. Keep in mind the 20 DMA as well as around this vicinity, and you'll want the markets to move to a fresh all-time high, which is up for you on the screen. The Nifty Bank, well, that's been facing resistance above that 51,000 odd mark. So the broad range you're looking at is the 50 DMA comes in this vicinity. It almost went to this 51,300 odd mark. So that's a resistance. The DMA on the downside, the important one to look at is the 20 DMA. So that 50,600 odd mark should hold out. Sectors that I'm looking at for today in particular, given the global backdrop, metals as well as tech. Both those two indices are going to be in focus in today's trading session, and they could relatively outperform going by the comments we've seen globally and the global cues on the whole. Stocks that I'm looking at, well, there are some changes in the F&O banned list. So that's where we're looking at that. Balrampur Chini has moved into the banned list, and we have a couple of stocks that have come out of that list. So LIC Housing Finance and Pyramid Enterprises. The start is going to be in the green, but today has the makings of a good session. So let's see how that goes.
Later this week, Nigel, there is, we talk about Thursday, that expiry.
Yeah.
Thursday is also the Reliance AGM.
Absolutely. Big one.
So that's a big one. And usually, Reliance is a big one. And something is expected. And leading into it, I mean, if Reliance starts to move, I mean, that's the other one. But before that, I mean, before Reliance, globally, there is NVIDIA results on Wednesday, which I think... So, I mean, it's a packed one. Both globally and locally as well. Ed Yardini is president at Yardini Research. He's with us to take some questions. Ed, good morning. Great to have you with us here. Thank you. So, Powell, all about just confirming what you've been saying for a while, Ed, that rate cuts are coming. And it's just, is it, I mean, 25, 50, doesn't matter. And do you think the equity markets will like 25 better, actually?
Yeah, I think so. I think the equity markets would like to see interest rates drop gradually, not abruptly. Abruptly would suggest that the Fed knows something that we don't know. Remember, it was only at the beginning of August that when the stock markets took a dive on the unwinding of carry trades, that there were some hysterics out there saying that the Fed had to lower interest rates immediately by 75 basis points. So I don't think the Fed wants to signal that there's any trouble out there, because there really isn't. And 25 is enough in September, and I think then they should wait. I don't think they should do another cut in November and another one in December. I think they need more data to confirm what the status of the economy is. And I think the economy is going to surprise everybody to the upside. I think it's going to be stronger than expected. And if that's the case, then there's absolutely no rush to lower interest rates.
Okay, so Ed, hi, great to have you on. So if you could expand on that.
Thank you.
So we get that first cut in September, and then are you saying that we'll keep getting gradual rate cuts with a strong economy. So then what I'm hearing is that Goldilocks will dance into the end of the year. Is that the market scenario we're looking at?
Well, I think the markets are expecting 3 cuts in the federal funds rate between now and year end. I think there's a likelihood that we'll only get one of those cuts in September, and that the economic news will look so good that the Fed will conclude that, maybe rushing interest rate cuts isn't the best thing to do.
Word on all the political rhetoric that's now heating up. And we know that, there's this big talk about raising corporate taxes, which is the stated sort of policy objective by Ms. Harris. We've not seen the market react too much to that. So what should we be prepared for in terms of just the market reaction, the equity reaction to what's happening in politics?
Well, honestly, that's been my position, is I'm not going to react to it until I know exactly who wins, not just who wins in the White House, but what the makeup is in Congress. Clearly, if we get a Democratic sweep, that's one set of policies that will be very likely suddenly. We get a Republican sweep, it'll be the other way. I think we're going to get what's called gridlock. I think whoever's in the White House isn't going to find it that easy to get things through Congress. If that's the case, then all of these policy suggestions may not even have a chance of occurring.
Hi, Ed. Good morning and good to see you. Ed, I recall earlier this year, we were talking about the S&P 500 moving to around 5,400. I think that was the target that you had, that 4,800 to 5,400. Right. We're currently at around 5,600. Where do you see the US markets go by the end of this year? And also, I want you to comment on the geopolitical issue, Ed. It seems that the equity markets are just ignoring that. Your comment out there.
Yes. Yeah, the equity markets are ignoring the domestic political situation. They're ignoring the geopolitical situation. They're just focusing really on the Fed, inflation, the economy, earnings, and those are all positive right now. I'm thinking now that we could get to 5,800 by year end. I am actually concerned about a melt-up. The problem with a melt-up is it's hard to really put in any sort of target because you don't know. It's all kind of becomes psychological. And I think Powell actually made a mistake. I think he was too dovish on Friday. He should have basically signaled that September there'd probably a rate cut, and then we'll see. But he seemed to be really putting a lot of weight on concerns about the labor market, and I don't see that there's a lot of reasons to be concerned. Even he admitted that whatever increase we've seen in the unemployment rates has not been related to layoffs. It's just been more people coming in to the labor market thinking that there's job opportunities out there, and it's just taking them a little longer to find those jobs. So I think he was too dovish, but it doesn't really matter what I think. What's important is what he says, and what he said was very dovish.
No, it matters what you say, Ed, because markets listen to you, and we do too. Thank you very much for joining us.
Thank you.
And running us through what you are, what you think the Fed will do, and your assessment of the entire situation. Ed's been sort of bang on over the last many months with his assessment through the sort of waxing and waning in terms of rate expectations, up and down. It's gone on and on. But he's been on the ball. Well, let's get you some opinion now. So we'll start with equities. This is Sunil Kaul of Goldman Sachs, who says that MSCI India's calendar 2024 earnings were cut modestly by consensus despite slightly better than expected results in the quarter, suggesting concerns around forward-looking guidance. He says, incorporating the first quarter FY25 earnings trends and reflecting the economy's recent GDP growth downgrades, he's trimming the full-year calendar 24 EPS growth forecast by 1 percentage point. So from 15, they're down to 14. They're retaining their CY25 forecast at 15% in line with consensus. He says, relative to consensus sectorally, they're expecting slightly higher growth in consumer sensitives and defensives, but lower growth in commodity, capex sensitive sectors.
All right, let's move on and get you some money market views as well. Kunal Sudhani of Shinhan Bank says the dollar got sold across the board on fresh dovish signals from the US Fed Chair Powell. He says fresh bearish acceleration is now pressuring targets for the dollar index closer to 100, 100.29 and 100.18 as well. And the psychological level of 100 itself, violation of which would be a signal towards the end of a wider multi-month range and spark a stronger drop. For the USD INR, he says 83.70 acts as the support, while 83.90 is a resistance.
Okay, well, on bonds, Vishal Goenka of IndiaBonds.com says the much-awaited statement by Fed Powell at Jackson Hole on Friday set the stage for U.S. to cut rates in its next September meeting. However, he says the pace of rate cuts remains data-dependent. Brewing situation in West Asia rallied oil prices by approximately 5% in the last 2 days. He adds some relief for the rupee with the U.S. dollar weakening is likely, and bond market will remain stable. The 10-year, according to him, should trade between 6.84 to 6.89%.
Well, we have a lot of stock-specific action track for you. We'll get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at tech stocks, Geo Financial, ETAM Drugs, DCW, KEC, ONGC, Ambuja Cements and Nykaa. All of them will be reacting to positive news flow. On the flip side, Zydus Life Sciences as well as Tata Technologies will be reacting to negative news flow. Well, we'll get to that in bigger detail, but before we slip into that short break, just want to wish all our viewers very happy Janmashtami. Wishing you, your families, all the love, peace, happiness, today, and may you have a good day as well. Well, on that note, we'll slip into a short break. You come back, we'll continue our focus on the stock-specific action, and we'll go into further detail in our top 10 stocks. Don't go anywhere.
Welcome back. Well, it's time to boil down all the action to the individual stocks that should be on your radar this morning. There's a long list out there, and we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning and happy Monday to all of you. Rima, let me start with you first. Focus on IT stocks this morning. What's the latest?
Well, the latest is the expectation of a Fed rate cut. Remember that Indian IT stocks like Nasdaq tend to react positively to any cut in the US interest rates. In fact, even if you see the commentary from the corporates over the last couple of quarters, when they talk about the decline in discretionary spending, the tough macro, they have alluded to high inflation and high interest rates in the US. So now that that tide is hopefully turning, there will be a sentiment rub-off on the Indian IT stocks. So Salil Parekh, for instance, just to give you an example, in the conference call which happened just in July, said the macro environment, at least in Western markets with high interest rates, has curtailed most companies from spending on big programs on digital transformation. Even C. Vijay Kumar, CVK of HCL Tech, has said, when asked about discretionary spending coming back, in July he said, I think even now there is some amount of discretionary spend happening, but for customers to become a little more liberal in terms of spending, I think it's largely driven by economic pressures, whether it's interest rates or inflation. So high interest rates has been a factor in impacting the macros in the US. So that will be a positive when that reverses. The Indian IT stocks ended down 1% on Friday, but since June, when the rally began, the index, Nifty IT index, is up 27%. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, let's focus on one of the pharma counters, then that'll be in focus. Zydus Life. Ekta, morning.
Morning. Well, important news which has come in for Zydus, and it was expected, where Teva has received US FDA approval for Asacol HD generic, which is basically a drug used for ulcerative colitis. Remember that this drug has been very important for Zydus because it accounted for 3 to 4% of Zydus's revenue, 8 to 10% of their EBITDA in FY24. And the assumption is that the product contribution will drop to less than 1% of revenue and less than 3% of EBITDA in FY26 on account of competition for Asacol HD. Now, the sharp decline, according to Jefferies, in earnings from new entrants in Asacol HD declines anyway because Zydus has launched a particular drug which is used for overactive bladders, which is Mirabegron generic, as well as increasing contribution from Revlimid generic, should probably just about compensate the competition that we are seeing in Asacol HD. And this is despite it even coming earlier than what it was anticipated to be. Separately, Zydus is buying 50% in Sterling Biotech for 550 crores. This is one of the leading producers of pharma gelatin. FY24 revenue was 555 odd crores. Sterling Biotech was acquired by PEs under NCLT. Post-acquisition, it's going to become a joint venture company for Zydus.
All right. Ekta, thank you very much for that. Well, we also have Geo Finance, which should be in focus. Abhishek is here to tell us why. Abhishek, morning.
Morning, Prashant. So, Geo Fin has got, a finance ministry approval for taking up their FDI stake in the company to up to 49%. Currently, FIs own about 17.55% stake as per the exchange's notification that we have. Company had sought this approval from shareholders as well to enable foreign investment of up to 49% in the company in May of 2024. So, stock is also in focus ahead of the AGM that is on 29th of August 2024. Back to you.
Okay, all right, got it. Abhishek, thanks very much. So Geo Finance in focus as well. Back to Ekta. Ekta, we have numbers from ETAM Drugs. How do they look?
Well, yes, operationally good. So that's why I expect the stock to be in the green. Revenue was up around 5% year on year. EBITDA 128 crores versus a loss of 125 crores year on year. Margins 12.6%. Profit 60 crores versus loss of 188 crores. Q on Q as well, there was an improvement in terms of margins, 12.6 versus 0.3%, and a turnaround on the bottom line. The CDMO margins, which is bulk of their business, improved to 14.4 versus 13% year on year, and branded formulations 10.3 versus 4% year on year. So expect the stock to be in the green, but this kind of performance should be sustainable for the company going forward.
Okay, Ekta, thanks for that. Well, let's wind this down then with some stocks in the news. Vamakshi joins us to help us out with that. Vamakshi?
Well, good morning, Nigel. Let me first start off with DCW Limited. The company is expected to open higher today, and that is because the FinMin has imposed definitive anti-dumping duty on CPVC imports from China and Korea. The earlier anti-dumping duty was imposed back in March 2020 and was set to expire yesterday, that is on August 25th. With this notification now coming in, this duty will be valid for another 5 years. But why does this bode well for DCW? Because the company had filed a petition seeking sunset review investigation on CPVC imports from China and South Korea. This essentially protects the business from cheap imports from these two countries, and business will continue as usual for DCW. So overall, going with the green for this counter. The next stock on my radar is KEC. Some order wins coming in for the company. They've secured new orders worth 1,079 crores in transmission and distribution and cable businesses. The company said that significant orders across Saudi Arabia, Oman as well as UAE have substantially expanded the company's international T&D order book in the Middle East. And with these orders, the year-to-date order intake has now surpassed 8,700 crores, reflecting a growth of almost 60% on a YOY basis. And lastly, let's also watch out for ONGC. The stock is also expected to open higher, and that is because the company has brought on stream its 5th of the 13 oil wells in the Krishna Godavari basin.
Okay, got it, Vamakshi. Thanks very much for that. Guys, just mentioning, I mean, on the CPVC news, I was looking at the reaction on the pipe makers, because for them, it's a raw material that they consume. So let's see how pricing plays out. Because if there is an anti-dumping duty, which means that now domestic prices are not that pressured by the imports coming in, is pricing going to increase for them? So that's why Astral, Prince Pipes, a lot of these stocks were under pressure. Epigral has a large facility as well. That was also down. So just mentioning that aside of DCW, a lot of these other sort of side stocks, part of that CPVC chain, we'll keep an eye out on them as well.
Oh, absolutely. Well, we'll try to speak with some companies as well in that space as we go along. But some block deals, right? I mean, that's essentially been a constant in these markets. Vivek is here to summarize. Vivek, morning.
Well, that's right. Quite a few block deals that happened in trade on Friday. Looking at the list of buyers and sellers that were declared post-market hours. First on the list, Ambuja Cements. Like we had mentioned, the promoter holder in investment sold close to 2.84% stake in the company at 625 rupees a share. Amongst the list of buyers, one of the largest chunks was picked by GQG, and GQG Partners picked up close to 0.7% stake, almost 2.6 crore shares. List of buyers otherwise too quite strong. NPS Trust, SBI Life, Mirai Mutual Fund, Morgan Stanley, they all picked up significant chunk as well. The next stock on the radar, Nykaa, again, something that we had flagged off earlier. Harinder Pal Singh and Associates, a pre-IPO investor, sold close to 1.4% stake out of the total 6.5% stake that they held at the end of Q1. Amongst the list of buyers, Goldman Sachs, Kotak Mahindra Mutual Fund, SBI Mutual Fund. Remember, this particular deal happened in the block deal window itself, and the stock rallied after that. And lastly, another large block deal that happened in the middle of the day was Tata Technology. Alpha TC Holdings, sold close to 2.4% stake in the company at the end of Q1. This particular entity held close to 4.34% stake. Going with the red on this particular name, given the fact that we are unaware of what exactly they plan to do with the remainder of the stake, the list of buyers not yet disclosed, assuming that the buying was less than 1%.
All right, got it. Thanks very much, Vivek, for all the recap of the block deal action that we've seen. Let's quickly look at the list for stocks to watch today. The ones that have positive news flow around them are IT stocks, Geo Financial Services, ETAM Drugs, DCW, KEC International, ONGC, Ambuja Cements, and Nykaa. The ones that have negative news flow around them are Zydus Life Sciences and Tata Tech. All right, with that, let's head across to Manisha Gupta, get a roundup of all the commodity market action as we come out of the weekend. Manisha, so it seems the rate cut indeed is coming in September. Tell us what's the read-through for commodities?
Oh, well, absolutely positive in that sense, because we've seen the dollar index also trade around those 13-month lows, and that clearly has been supportive. So on the Asian markets right now, we're trading in the positive across commodities. There are concerns coming in from the Middle East. There are supply risks and escalating fears of a broader conflict in the Middle East with what is happening between Israel and Hamas, and now also Israel and Hezbollah, and that has added premium to prices also. So we have seen the crude oil prices come off its 8-month lows. It gained 2% on Friday. It's trading in the positive in Monday as well. Good gains is what we have seen in metals also. So you have gold prices back above $2,500 an ounce. Silver prices gained 2.5% on Friday, yet again trading in the positive right now. And you have the base metal prices trading firm as well. The copper prices have put in 2 weeks of gains now. There is bargain buying on the lower levels and also improving sentiment from China. All of these factors supporting the industrial commodities also in Asia.
Okay, all right. Manisha, thank you very much for that. So that's commodities in focus. We'll take a quick commercial break here. Stay with us. We are back. Prakash Devan will join in to talk about some of these individual names which our research team put out. What should you be doing with them and more. That's coming up in just a bit.
Welcome back. Hope you're having a good morning. Well, we've listed all the top stocks for you. Let's get into some fundamental analysis on that. Prakash Devan joins us to help us out with exactly that. Hi, Prakash. Good morning. Good to see you in as always. Well, going by the global backdrop and what Powell said, IT stocks will be in focus today. And just to remind our viewers that yesterday marked 20 years since TCS's IPO. And I'll tell you what, the IPO price was 850 rupees. The dividend itself is close to around 4,500 rupees. Forget about the stock price appreciation. So that's been one of the big quality names out there. Prakash, what's your view on tech? It could get a leg up today. What's your approach out there? What do you like from the tech space?
Good morning, Nigel. So, you're right. The IT pack has, of course, in anticipation of this rate cut being kind of a buzz. But what's going to be interesting now is that there will probably be a little bit of a relook at some of the names that have not done well, because what you're anticipating is a decent change in mindset from companies to start, releasing orders, and which will largely be from Jan onwards, right? So it's not that immediately things are going to change. It's going to take a while for the interest rate cut to kind of get digested and processed. But I would specifically answer your question, look at something like Wipro. Now, why I'm saying Wipro? Because Wipro hasn't, been the best in shape in that sense as compared to some of the other bigger names like Infy and all. But where things change is that Wipro has very decent long-term contracts, which it always gets awarded when things look up for the underlying client segment. And if that were to happen with this interest rate cut and it signals a change in that mood, you'll probably see a little bit of that come through, and Wipro gives you that comfort in terms of valuation as well. So I would only look at that. Of course, the mid-cap IT has been doing well and will continue to do well. But there's not much to be made out there, is my sense. You'll probably have a higher delta in the case of Wipro because it's a large business, which is still undervalued.
Prakash, hi, good morning. Good to have you on. So, just to take off from the point that Prashant was making earlier, this week, one big event is going to be this Reliance AGM, right, Thursday, where usually we get, a roadmap, big announcements. I mean, I think it was 2 years back when we got the whole new energy sort of rollout announced by Mr. Mukesh Ambani. The market's been holding its breath on any potential demerger of any of the businesses, but I don't know if it gets it or not. What would you watch out for? And what's your, expectation of the stock itself? In the last 2-3 days, We've got a lot of target price revisions of northwards of 3,000.
Good morning, Subi. So you're right. It's a big piece in the hall right now. My sense is the AGM is going to, of course, not come with very detailed roadmaps and all, but it's going to give a broad direction and possibly timelines, which is what the market will love on the potential demerger of the retail business. The interesting thing is just see the change that's happened on Geo Financial Services, where 49% foreign ownership has been allowed. So what it does is it opens up another piece where capital raise could happen at the right valuation, right time. So, markets will probably start building that in terms of expectation. My sense is the biggest change, the biggest announcement related to the new energy verticals is going to be key. Because all of us are trying to, we know the quantum, we know the broad contours of how the spend is being done or is being done, but it's the timelines and what is it that, is the commercialization is going to look like. So that, I think, in my view, is going to be a big piece. How much are they going to span in terms of the expansion? When is it going to start? So if that happens, then you have the stock starting to re-rate the earnings from that business at some point in time. On the stock, I think it's definitely undervalued from my perspective. I believe the sum of parts is far bigger and you would still have a 15-20% upside if you were to look at that. And if the market gains this liquidity-driven momentum, I don't see any reason why Reliance will probably not scale up to these recent highs and probably cross that as well. But you've got to be patient. It doesn't move when you expect it to move. It moves along with the market. It makes the market move along with itself. So you'll have to wait, but I definitely feel there's headroom out there.
Prakash, morning. Some of the earlier sort of multi-bagger sectors, you take PSUs, for example, right? I think zero returns since mid-June. You look at defense as a sector, I mean, if they were an index, I think you'd be down from mid-June. Are there, what do you make of this entire space and any opportunities here? Or you think it's just sort of too overdone still, even with the slight sideways or even pullbacks, especially in defense?
Good morning, Prashant. No, you're right. I mean, the erosion in, it's not like, a drastic change yet, but I think it's a soft bleed that's happening in the case of defense PSUs. While there is enough news flow to bolster, the expectation in terms of earnings, all of these are way ahead in terms of anticipation. I mean, the results of whatever new order flow that you're seeing, new capabilities and JVs and all of this is all beyond 27. 26, 27, 27, 28 is ballpark where, things change. So what happens is this period from now till then is as I said last time, is going to make them very vulnerable. Because people might decide, say, hey, if everything's going to happen in 26, 27, why am I buying it right now? I could probably look at it 6 months later. And because there's profit for most people who've entered at decent levels, you will see some sort of profit taking, while new buyers might not want to be so enthusiastic in terms of time. So that's where, the PE multiples are contracting. And that's good for the market because all the exuberance that you had will probably soften without creating some sort of a liquidity overhang from these stocks. So I would believe there's still some time for people to re-enter. The only PSU pack that I find extremely promising, and I mentioned this about a week back when we were discussing, is the oil marketing companies. I mean, you very clearly have an IOC at 2.5 lakh crores, 40,000 crores profit available at 6 point whatever odd P, and there's still much more to go. So I think you would rather be in a space which is still government led, still driven by expansion, but you're not paying top dollar for the valuations.
Okay, all right, Prakash. Vivek, my colleague, was just talking about some large trades that took place on Friday, and one notable name is Tata Tech. I recall when it listed, the stock went hammer and tongs. It went through the roof, and from there it didn't do anything. We had a large trade that took place at around 1,020 rupees on Friday, and from there the stock showed some traction. Now this technical overhang is out of the way. The business has plenty of promise. What's your view on the stock?
Interesting stock that you pick, Nigel. Of course, there's a lot of whisper on the street in terms of who the buyers are. The sellers, but in terms of majorly the buyers. So if Alpha TC is selling out, people probably can also interpret that as a negative. But my sense is, the market in its wisdom gave it the right price. Wherever it went to 1,200 odd, I don't remember, and came back to this 1,000 levels. Now the stock probably has to perform and start delivering. And the commentary that they have, the tie-ups that they made, the contract with the BMW, there's much more in the offing. Their CEO came and explained quite a few things that are in the pipeline. So my sense, it's a great company, great business that's being, just being shaped to kind of, what you call scale up in terms of a global footprint. But the valuations are not expensive at all, though they might seem more so from what we've seen in other smaller tech companies. This could also start doing well. It'll be lumpy. The news flow will drive the stock to be very lumpy. From 1100, from 1000 odd, you'll probably see it go to 1250 and then rest there for some time. Very similar to Tata Communications, the way it went from 500 to 3 years back to wherever it is today. So I think that's the piece. But definitely, it's very interesting. I would believe it's a great buy. And I've been speaking about this on the technology side as well as a pick. But you'll have to be patient. There's no fireworks in the making as of now, at least.
No fireworks. Speaking of fireworks, Prakash, Trent is finally making its way to the Nifty. And what a journey, what a story, right? I was looking at a longer-term chart. The stock used to be just about 1,500 odd. And that was a level. Yeah, 1,500 was a level not too long ago, July of 2023. And then everything's changed since then, right? So what's your sense? The question is, typically when stocks finally enter the Nifty is when the juice is over in the trade. What's your view on this?
So, just a sec, sorry. So first and foremost, as a matter of disclosure, I will not be able to give you any very clear this thing on the stock view because of the position that I have. But I can only tell you one thing, that this is a space that has seen disruption and still has room to see disruption. The only thing is that, it's very difficult to find larger players. I mean, this name has gone all the way to become so big that it's reserved a seat for itself in the Nifty. But there are smaller names that will start, re-engineering themselves, given the changes that are, very clearly on the anvil on the e-commerce policy, the way the consumer behavior is changing. So I would believe you will see more disruption happen here. On this, of course, this is an event that a lot of people were anticipating and waiting for. So I would love to, wait to see the reaction of the market and once that event is done. So, that's all I can say right now. But yes, it's a great space to fish, even for some smaller names.
Yeah, I'm just correcting the dates. The 22nd of May 2023, so just a little over a year back, the stock was trading at just around 1,500 rupees. And look what happened after that. I mean, just phenomenal stuff on Trent, almost closing in on 7,000 now. Well, Prakash, do stay on. We have more questions for you, but we need to take a quick break. We'll come back on the other side and also, of course, get a technical spin going. Trading calls for the day coming up with Sudarshan Sukhani as well as Shrikant Chauhan in just a bit.
Welcome back. Well, Prakash Diwan is still with us. Prakash, I wanted to ask you about Ambuja Cements. How do you read that development? Part of the street was a little skeptical that the promoter converts shares at 419 and then offloads some share at around 425 rupees. And all of this in a matter of around 8 to 9 months. But the other part says that we want large cap names. So that's why we view this positively because it's deleveraging the parent, similar to what we saw in Vedanta. Your view on Ambuja Cements?
Extremely positive. What has led to this situation where the promoters could encash is the change they brought about in a sleepy company, starting to work on the internals, especially logistics. There's so much of cost saving that is already visible within its metrics. And this will continue, Nigel. You understand the business. When you don't, and in this entire period, you've not actually had very great pricing pass-ons, right? I mean, you still have an opportunity when prices reset themselves post the monsoon season, that things will look up for most large players. especially the ones who have footprints in demanding geography. So I think it's a very wise thing. The business doesn't alter just by so this minor dilution by the promoters, and they need, as you rightly said, not just to deleverage. It could kind of give them opportunities to acquire some other businesses as well, for that the balance sheet also starts kind of getting in a position to have more money coming in for strategic buyouts. So there's lots that's kind of in the pipeline, I'm sure, and this is just a precursor. I'm quite positive on the underlying business. Forget all the all the headwinds that you have ahead of us in terms of mergers and all. But I think the sheer size and scale of business that they are managing, they're the only ones who will compete with Ultratech, right? I mean, and there's somebody who's at least there to kind of capture markets that Ultratech is not expanding into. So in that way, both of them will grow together, but will grow at a very decent rate.
Prakash, throwing some more index changes at you. This time the FTSE review. Now, a lot of additions to the all-world list. Let's put up the list that I was alluding to earlier as well. Bank of Maharashtra, Bharat Dynamics, Central Bank of India. There's also Cochin Shipyard, by the way. Remember all the volatility on the shipbuilders last week. So Cochin makes it to one of the FTSE indices. There's Escorts, Kubota, GE, T&D, Hitachi, and many others. We'll just put up the list. Yeah, there we go. The list is there. The 13 stocks getting added to the all-world index, and some 40 plus getting added to the all-cap index. This is the all-world list. Any thoughts on any of these names? I mean, a lot of this buzz was already in the market, but in case, I mean, there might be some residual interesting action on fundamentals and anything that you might have looked at from the list.
Absolutely. So I wouldn't really be able to comment on how the market reacts to these changes from a flow perspective. But fundamentally, if you look at one name that's so interesting, and that's Escorts Kubota, why it becomes so important for an Escorts to be part of this list? It's as simple. When ETF money, FI money comes into India, which has just started doing that, you will have, the Japanese parent, the co-parenting or whatever, one of the parents is Japanese. Escorts is in the space which a lot of FIs like. It has scale, and it hasn't done as well as, let's say, M&M on certain counts. So I would believe that's the name that will probably benefit, maybe not immediately, as I said, but on a fundamental basis, as change happens, sales pick up, margins improve, new launches happen. So that's a name that could be interesting. Some of them I really don't understand. Bank of Maharashtra, for instance, how will things alter? But the FTSE index is followed by a lot of European FIs, and for them, this could make the grade. So I would only look at one of those names. As I said, Escorts is probably the only one that stands out.
All right. Prakash, stay with us. We're going to come back to you with more as we sort of go along. But let's get in some technical sort of ideas as well. Shrikant Chauhan of Kotak Securities is with us to run us through what he's making of things. Shrikant, good morning. Good to have you here. Prashant this side. Your thoughts, Shrikant? The setup looks positive. Slowly and steadily, the Nifty has been inching up. Not sort of short bursts of 200-point rallies, but, 30, 40 points every day, which is good. What's the sense? New highs?
Good morning, Prashant. Good morning, everyone. I think, the way the market is consolidating and it is crossing all its important levels, and even if we go through with option statistics, then there also we are seeing good amount of shift from lower levels to, let's say, higher levels. So from 24,400, now the supports have shifted to 24,600, where the market is having support of 20-day simple moving average. But while looking at the setup, I think, yes, we are going to cross the level of 25,050, 25,100, which was the highest level for the market. But for the time being, I am of the view that it is going to be gradual. The reason is because all these heavyweight stocks, especially from the banks, they are not performing, or maybe the momentum is not there. So unless and until we are not seeing any specific momentum from HDFC Bank or State Bank, I think we are going to see gradual upward activity in the market. So the strategy should be to look for adding position if there is any correction during the day. But in case if we see the market is opening somewhere close to 25,000, then based on option statistics, we need to be a little bit careful in terms of adding long position. So there we should look for taking some profit. But broadly, I am of the view that market is going to cross this level, 25,100. And eventually, I think in next maybe few weeks, we are going to see the levels of 25,500.
Okay, Shrikant, we'll take a quick break here. Stay with us. I want to come back to you for more in terms of specific stock ideas that you have. We also will have the pre-open session in about 7 minutes. Jay Kale is also going to be with us of Elara Securities in a little bit from now. So stay tuned.
Welcome back. Well, let's continue looking at some trading strategies for the day. We have Prashant Chan with us. Prashant, good morning. So let's come to individual stocks. What do you have your eye on today?
Yeah, I think so. Today, we need to focus on few auto companies because most of these companies managed to reverse from their important levels, or few of them are crossing their important resistance levels. In that, we like Tata Motors, which is currently around some 1,080-85. And the formation is indicating us that it is heading for the levels of at least 1150, 1170 sort of levels. Even if you go through with Tata Motors DVR, then there also we are seeing good amount of volume accumulation. So I'm of the view that it's a buy at current levels with a stop loss close to 1,060. We can keep a target of 1150, 1170. And the other stock which we like is ONGC. Crude also is bounced back from the levels of 75 to almost 80. The overall pattern of ONGC is also indicating us that it is into lifetime breakout. And if we go through with its important levels, then it is very close to its important support levels of 318, 320. So from here, again, the stock can bounce back to the levels of 355 or 360. So ONGC is also a buy at current levels with a stop loss close to 309.
Got that. Shrikant, thank you very much. We'll come back to you for more a little later. The AU bank block deal has been done, is what our colleague Nimesh is saying. And we'll have details up on your flashes in just a bit from now. So Vivek, of course, earlier was highlighting some of these blocks, and the AU one has gotten done. All right. Chandan Taparia is with us now, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. Good to have you here. What kind of trades stay long on the indices? And specifically a word on the Nifty Bank as well, which has been the weaker of the two indices. Chandan.
Yeah, good morning, Prashant.
Yeah,
thanks for having me. Happy Janmashtami. The Nifty has been witnessing sustained buying interest from lower levels. However, the pace of buying has got slow. But we believe that till it holds above 24,650 zone, every small decline could be bought for a lifetime high target to us 25,100 and beyond. So we believe that overall the volatility index is falling down. We have seen the stability in the global market. Base of the index is shifting higher with hold or put call ratio. So till Nifty holds about 24,650, look for the bullish stance, and market is all set for the fresh lifetime high. Now talking about the Bank Nifty index, the Bank Nifty has been holding well above its 50-day exponential moving average from last two trading sessions. However, the momentum is missing, but the good part is the index has negated its lower top, lower bottom on the weekly chart, and recently it completed a bullish pattern similar to double bottom on the daily chart. So a small follow-up is required. If it manages to hold 51,000, then short covering cannot be ruled out ahead of its monthly expiry, and in that scenario, it can head towards 51,500 to 51,750. So immediate support for the Bank Nifty is near 50,500. And a decisive hold above 51,000 could see the spike of 500, 750 points led by short covering. Now talking about the stock specific, positive on the Dixon. We have positive stance in selective IT name, and Dixon is one of the strongest counter. Overall, it has been making higher top, higher bottom, one of the strongest name in IT form. It has seen a fresh consolidation breakout on the daily and the weekly scale with built up of long position. So one can buy with support of 13,000. And the stock has potential to extend the rally towards 13,900 level. Second trading idea, that is buy on Motherson Samvardhan. We have positive on the Nifty Auto and selective auto ancillaries, including Bajaj Auto, Tata Motors, and Motherson Samvardhan looks promising as it has given a breakout from his falling supply trend line on the daily and the weekly chart. We have seen put writing at 190. Coal unwinding started to witness a 200 strike. So because of that, it can head towards the new lifetime high. One can buy with support of 192. And here we have a target towards 207 level. Last trading idea, that is buy on Bharti Airtel. One of the strongest counter. It has given a highest daily close in last 15 days. Sustained put writing with higher delivery volume indicate positive stance could be seen in the counter. One can buy the stock with support of 1475 for target till 1565 on the higher side.
Okay, all right, Chandan. Thanks a lot for joining in, giving us your call on the markets. Happy Janmashtami to you, your family, and may Lord Krishna, bless all of us and our families as well. Thanks a lot for joining in, Chandan. Well, let's get in Sudarshan Sukhani then into this conversation. Hi, Sudarshan. Good morning. Help us out with your call on the Nifty, and then you could fill us in with your stock calls.
Yeah, good morning. And Nigel, it's so easy. The market is going up consistently. There is only one trade in the Nifty, and even now in the bank Nifty, that is to look for intraday dips and go long in that position. You want to carry a position, that's good enough. If you don't want to, you'll get something out of the trade anyway. Again, I'm saying that the chances are that we are now looking towards 25,000, hopefully before the next settlement this Thursday. Stay long in the Nifty, add to your long positions, initiate long positions. That's the simple trade. Now, individual stocks are following the index. We have a lot of, opportunities in mid-cap stocks, large-cap stocks. Coal India is my first buy, stop under 528. Divi's Lab, the pharma sector itself is doing very well. Divi's Lab is a buy with a stop under 4828. Hero Motocorp is a buy with a stop under 5315. And finally, SBI Life is a buy, and this sector had a decent run last week with a stop under 1782.
Okay. So Darshan got it. Thank you very much. We'll come back to you in just a bit. By the way, the pre-open rates have kicked in, and it's about a 120-point bump up on the Nifty that we're getting. One of the interesting movers is the entire IT space. So Tech Mahindra, Wipro, Infosys, early moves, TCS, all these stocks are excited on hopes of perhaps more rate cuts coming through in the US. And we saw that play out on the NASDAQ as well. So some of that rub-off is evident. And the other is Reliance, as Prashant highlighted, and that's the event of the week in some sense with the AGM coming up. So Reliance also looking like it wants to start on the optimistic side with a gain of over 1%. Okay, let's put the spotlight now on the auto space. The stocks were really revved up on Friday towards the end. There was a rally across the board, including four-wheelers and two-wheelers. So what is the expectation going forward, and what are the fundamentals looking like? We have Jay Kale, Executive Vice President at Elara, joining in. Jay, thanks for being with us. So it's interesting, the trends, the way they're playing out. It seems that there's so much buzz in two-wheelers. The numbers have been good. There's so many new launches happening. There's talk about a rural pickup as well. But four-wheeler volumes, the big question there is that whether, volumes have hit a bit of a plateau. What's your sense?
Yeah, hi, good morning. So definitely two-wheelers has held up quite well. We've seen the entire FY24 and even coming into a YTD FY25, the two-wheeler retail volumes, if I have to look at, are in double digits and are higher, tracking still higher than our full-year growth estimate. Of course, there is this hope of rural recovery also coming back. Festive is something that we need to keenly watch because that's a very heavy weightage in terms of two-wheeler volumes. So we are expecting close to a double-digit two-wheeler growth in FY25, which will be led by rural coming back while urban continues to do relatively better. That has not been the case specifically for passenger vehicles, like you rightly mentioned. Of course, passenger vehicles volumes have been struggling. There has been rising inventory levels at dealers, and but you also have to understand that July, August is relatively a weaker seasonal month for passenger vehicle industry volumes also. So it's not all lost for the fiscal. We still have hopes from the festive season volumes jumping back. It will be led by companies who have good model launches and refreshes in their pipeline. But definitely, two-wheelers are expected to outperform passenger vehicles from a growth perspective going forward.
All right, Jay, good morning and good to see you when you're sounding quite bullish on the two-wheelers. Let's get a little bit into some more detail out there. First, I wanted your view on Ola Electric. What have you made of this listing? Out of nowhere, the stock has moved up. So your view on that one. And since you're bullish on two-wheelers, your top pick from there.
Yeah, I think, see, Ola Electric, it's still in early days, both of listing as well as their operations, but definitely a very good listing debut that it has. One needs to see how, when liquidity eases, where the stock settles to. One also has to see the market share, where it settles to, because, you will be having incumbents also ramping up their capacities. The start has been pretty good for Ola Electric in terms of market share as well. But one needs to see how that pans out in a medium to long-term perspective. And of course, their venture into the cells, how that stabilizes. I've mentioned that earlier as well, that it's not easy to stabilize cells. We've seen that globally, especially with prices coming down. So what kind of cost advantage that actually gives to the OEM, which, Ola has been speaking about, also needs to be closely watched. We currently don't have it under coverage, so can't give my official view. But in the two-wheeler space, our top picks remain Bajaj and TVS Motors.
Ola, Jay, hi, morning. Ola has a market cap of about 55,000 crores. Many are on the street are a little surprised with the rally. But have you heard queries on what this valuation could mean for Hero and its 35% share in Ather? And how that should be valued? Any thoughts at all? I mean, have you thought about this?
Yeah, absolutely. That's a natural rub-off effect on the SOTP valuation that we give for Ather within the Hero. Of course, it has 43% stake in Ather. Now that obviously increases. Of course, with stock price of Ola almost doubling, the valuation that we were giving inherently into Ather, that at least for the moment increases substantially. But really, like I mentioned earlier, one needs to see where this valuation settles for Ola, and in that context, what Ather comes out in terms of actual valuation on the listing side. So it will be a little bit of volatility going forward, but definitely, from a SOTP perspective, it rubs off well on Hero for the short term.
Okay, that's on the two-wheeler space. Jay, before we wind up, on PVs, if someone wants to be a contrarian and wants to, be looking at the longer-term picture or the medium-term picture, then any specific stock that you'll go with? I mean, should one stay with M&M given the strengths that they have in terms of market share? And also throw in a word on Tata Motors because there's so much going on. I think over the last couple of days they also released this new tax calculator because they'll be cancelling the ordinary shares and there's a restructuring, there's an eventual demerger. So just a word of advice there as well.
Yeah, I mean, I think M&M has been has had a stellar run despite the weak industry volumes. Their volume growth has been in double digits and market share increase we've seen. So that should be, till this volume growth and market share continues, I think that M&M should remain in good stead. And Tata Motors specifically, our view, on the India PV and India CV business, of course, it's largely stable. India CV, we don't have a particularly very favorable view on the CV cycle. But I think Tata Motors more so, our view is positive, mainly led by JLR. Over there, we see that the margins as well as profitability and the mix impact that JLR has seen is giving them healthy return ratios of 20% plus. And we see no reason why that should not lead to a re-rating within the JLR portfolio versus its peers like Porsche. So we see some bit of valuation re-rating upside potential for JLR given its mix and margin profile moving up as well as ROCs moving 20% plus. And that's why we would be bullish on Tata Motors.
All right, Jay, appreciate you joining in. Thanks a lot for giving us your comments. Wishing you a good Monday ahead, and we look forward to hearing from you in the time to come. Well, it's 9:10, so let's get that call coming in. Sudarshan's back with us. Sudarshan, go ahead.
Well, Hero MotoCorp can be considered for buying with a stop under 5,315.
Okay, got it, Sudarshan. Let's go across to Vamakshi now and recap some of the important stories and stocks to track. One of those stories is the anti-dumping duty that has come in on CPVC. Vamakshi, tell us the likely or potential impact on the stocks to watch.
Well, absolutely. The government has imposed a definitive anti-dumping duty on CPVC imports from China as well as South Korea. Now, keep in mind that the earlier anti-dumping duty was imposed back in March 2020 and was set to expire on 25th of August 2024. So, essentially, this is an extension of the anti-dumping duty that was imposed earlier, and this duty will now be valid for another 5 years. It bodes well for DCW as well as Epigral because it protects the businesses from cheap imports from these two countries. DCW derives nearly 17% of its revenue from CPVC, and in fact it had planned to double its capacity in this particular segment. Apart from that, Epigral has also very recently in the first quarter itself commissioned the CPVC resin as well as the compound facility, and they were expecting demand to grow at a CAGR of almost 13% in both the resin as well as the compound segment. So overall, given that this anti-dumping duty has now been extended, it bodes well for Epigral as well as DCW.
Okay, all right. Thanks a lot for that, Vamakshi. So good news for those companies. The input costs go up for some of them as well. But Vivek joins us to tell us about CESC. The entire group was buzzing in Friday's trading session. Vivek, tell us more.
Well, that's right. So the entire Sanjeev Goenka group actually held analyst days for various companies. The one that we are focusing on currently is CSE. In the investor day, largely the company actually focused on reiterating what is it their targets. We'll highlight the top targets that the company has set and what is it that they've guided the street to. First, the company said that they plan to increase ROE by 3% from 12% currently to 15% in the near future. Along with that, the company wants to go ahead and pivot from the regulatory government operated business model to a more self-control model. Along with that, the company said the demand as well as the Noida as well as the Kolkata discoms remains very robust. They expect cash flow across all of the discoms to go ahead and improve quite significantly. Along with that, like we had highlighted earlier, the company said that they have now started going ahead and doing a recovery as far as fuel and power purchase adjustment surcharges are concerned. The company is still awaiting for any price hikes. Along with that, very strong commentary coming in terms of renewable energy capacity addition. The company, one, will be developing a 3.2 gigawatt solar wind hybrid renewable project in the next 3 years. Plan to go ahead and commission 1 gigawatt of renewable energy this year and 1 gigawatt every year thereafter. Lastly, the company said that they foresee close to 10 gigawatt of capacity to be added in the next 6 years. Also have plans of 10,500 million metric tons per annum of green hydrogen capacity addition. Overall, positive takeaways as far as CAC's investor day meet was concerned.
Right, no, absolutely. Vivek, on, Philips Carbon, right? Did he kind of sort of double down on what he told us earlier? Did that come up? Okay, I think that was just, okay, all right. We'll get on it a little later, but that's essentially CESE, largely in focus. Largely CESE in focus. 80 points higher on the pre-open on the Nifty is what you have. About 300 points on the sensex, what you have. So what 81,388 and 24,906. 25,078 is the earlier all-time high on the Nifty, which is not very far away. I mean, it's essentially another 1% or so, and you're there in terms of the earlier high. For the Nifty Bank, it's a little bit more work for the index to get there eventually.
Prashant, talking about the Sanjeev Goenka group. The RPSG Ventures, that's the holding company that they have that holds more than 50% stake in FirstSource. It also has stake in the IPL franchise, 50% or thereabouts, and also Mohan Bagan, besides an FMCG business. That one, the volumes are very low today, but in the last 1 month or so, since Shireen's interview, since Mr. Goenka spoke to Shireen, this one actually has been the biggest outperformer. It's up more than 30%. So that holding company, they expect maybe some kind of value unlocking to come about or the likes. And FirstSource has done well as well. So, if you just pull up a 1 month chart, it'll get a perfect picture out there, up close to 30%. We had spoken about it on ERT as well, Editors Roundtable. So I think in a short while from now, we'll get the RPSG Ventures 1 month chart, which will give you a fair idea about why we're addressing this. The volumes are relatively lower. This holding company actually has done very well.
You could buy individual businesses or you could buy this one. And I think many have chosen to sort of look at and buy this one, which gives you essentially a piece in many of the businesses because the group, of course, is sounding aggressive on many fronts now, not just the base large power business, which is CSE. Some of the allied businesses also coming into sharp focus. I think we've got about a minute to go for the pre-open session. And we'll have for the market opening, and then we'll have rates coming up for you. And let's just sort of wait for those to come up on your screens. There is, I mean, a fair bit to tackle. The big story globally, of course, is the complete collapse in the dollar index. And that typically sort of sends a flood of money to emerging markets. It's not happened so far. But you want a lower dollar, not higher dollar. And dollar is now threatening to come down into 2 digits. I mean, 100, 100.5, 100.6 around is where the US dollar index is trading at. Of course, I mean, it also meant higher yen and euro, etc. But the dollar basket is lower. What do you have? For 24,900 on the Nifty, so it's slightly higher, 70 points. That's about 0.25%. We've got the Bank Nifty, which is on your screen, about 180 points. 51,100 on the Nifty Bank. And you've got the IT index, which is starting about 0.8% in the green. So IT services, typically, I mean, the rub-off in terms of lower interest rates starts to come through. And the other one, of course, has been metals, which should also benefit. The commodity prices go higher, base metal prices go higher as the dollar goes lower. So the metal index is up about 0.6% or so. The heat map is up on your screen. You've got about 5 stocks basically lower. It's a sea of green. It's about 0.25% on the Nifty so far. Surabhi.
And inching closer and closer, right? Now we're less than 1% away from that all-time high. So let's see. So it's an early start into the day. We'll see how this builds. In terms of individual stock actions, ONGC is up and about. IT, as Prashant mentioned, is sort of off to the races. Tech Mahindra, Wipro, TCS, all these names up and about. The banks are keeping the IT stocks good company, which is good news for the Nifty usually. So something like an Axis Bank, early up, HDFC Bank gains between 0.5% to about 1%. State Bank of India is up about 0.25%. So interesting moves coming in over here. Bajaj Finance and Finserv, two of the non-bank financials on the Nifty, are also doing well today. So that's bringing up the positive side. On the downside, there is a bit of a cool-off in Apollo Hospitals, down about 2%. Dr. Reddy's is starting off slightly weak, 0.5% lower. And then you have some of the life insurers, which had a very good week last time around. And now there's some profit-taking on an SBI Life and HDFC Life. So that's the early start. But of course, lots of action in the mid-caps. There's KC International, new orders. And then, of course, stocks like DCW, Epigral, Astral, a lot of these reactions to the CPVC anti-dumping duty that are playing out on the screen as well.
Well, that's right, Surabhi. KEC, they are bagged an order worth around 1,079 crore rupees in the T&D and cables business, so that's flying away. Ashoka Buildcon, they have emerged as the lowest bidder for a project worth around 478 crores from MMRDA, so Ashoka Buildcon as well up and about. The other one that's moving around this morning is Jaycorp. They've informed exchanges that they will be having a board meeting on 29th of August to consider a buyback of shares. So that's another big mover from the broader markets. NIIT Limited, the big bull, Mr. Damani, has bought close to 8 lakh shares at the price of around 127 rupees odd. So that was the big mover actually in Friday's trading session. It's putting on another 10%. Put the two sessions together, the stock is up more than 25%. From the pharma names, Olympic Pharma, they've got the US FDA approval for betamethasone valerate form. So on the back of that, I think that one is moving in the northward direction. On the flip side, because there's more competition for Zydus for one of their drugs. So that one's one of the top losers out there. So Alembic and Zydus moving in opposite directions. Tata Tech, it had a bump up in Friday's trading session. The block deal out of the way when Alpha TC Holdings sold 2.5% stake. It's seeing some follow through. So in two sessions, that stock is up more than 5% or thereabouts. So it's a good start. Some of those metal-related counters are doing well, like Nalco. That one's up and about. You have Hindustan Copper as well that opened up well in the green. And Vedanta as well could do well. Now just keep an eye out on all these stocks because aluminium prices from the recent low, they're just around 45 days or so ago, it's up more than 10% from the recent low. So keep an eye out on a few of these names. And just one more stock that's coming on my radar, GSPL, stock is up 8%. Big move is what we are seeing. But as we pointed out earlier today, tech and metals, they are the sectors that are zooming ahead as we speak.
Well, Nigel, so a few other names, right? NIIT is up. NIIT is the biggest volume-led gainer. NIIT Limited, the education company, 12% higher. It's got huge, man, you don't see volumes like this on NIIT. Actually, the stock hardly figures on the top of the leaderboard, but it is today. And it's on your screen, 4 million shares, by the way. KEC, of course, 5% higher as expected. There is Ashoka, I think, Buildcon, which is up about 3.5%. Craftsman Auto is up 5%, has got decent-sized volumes for this point in the day. That's a large one. GMR is up about 5%. GMR Power, that is, so 128 on the other one is up 128. Yeah, there you go. 3 million shares, a large one. And Nigel mentioned GSPL, yeah, 7% gains now there. Tanla is up about 3.5%. It's got decent sized volumes. Polymed is up about 6% or so. Honasa has been moving up 6.5% this morning, and it's got decent volumes as well. And we were talking about RPSG Ventures, right? So another 4.5% this morning. Stocks at about 1,080 right now. So that is the Sanjeev Goenka Group holding company, which is popping up. MedPlus is the largest. I think there's been a block in MedPlus because volumes are humongous. 2.5 lower, 618, 690. Look at that, 17 million shares on MedPlus coming through. And of course, Ola Electric is down another 4%. It's come off to about 120-ish kind of levels. We mentioned Zydus Life, which is down 4.5%. Zydus Life has also got very large volumes. Nykaa perked up earlier. Nykaa is down about 3%. Varun Beverages is down a little bit. Look at Reliance Power. I mean, there's been this sort of, that power project which supplies power to Bangladesh, overdues, and there was some news flow around that over the weekend as well. That is Reliance Power. But of course, I mean, there was the other issue as well with regards to Anil Ambani. So maybe that is kind of weighing. Raymond is down about 2% as well, but the stock had a sharp run-up. A subsidiary listing in the next couple of weeks is due. Stocks about 2.5% lower. Gautam Trivedi is with us. He is our market master of the day, co-founder and managing partner at Nepean Capital. Nepean Capital. Gautam, good morning. Great to have you with us here. Thank you very much for your time. Appreciate it. You're coming back after a while, and a lot has changed with regards to expectations out there. Markets, of course, have clawed back almost back to all-time highs. I remember, correct me if I'm wrong, you were a little cautious last time we spoke, Gautam. What's the view now? Globally now, very sort of high expectations that rate cuts are imminent, and that perhaps will spark a rate cut cycle across the globe as well. Your thoughts, Gautam? Gautam, can you hear me?
Hi, can you hear me?
I don't think... Yeah, I can hear you, but can you hear me, Gautam? I don't think Gautam can hear me.
Yes.
But okay. So you can hear me?
Now I can hear you, yes.
Okay, all right. No, I was just asking. So you, welcome to the program, Gautam. We could see you, but we can't hear you. Rather, you could not hear us. Right. Where are we at in terms of the cycle now, Gautam? You were a bit cautious, if I remember correctly, last time. Markets have sort of clawed their way back almost to all-time highs. Rate cut expectations are quite high, not just here, but globally. So where does that leave markets at?
I think, the extent and the speed at which the money that's been coming in from domestic retail investors, I think has been unprecedented. For people like myself and a whole bunch of my peers who've been in this market for the last 25 to 30 years, haven't seen anything like it. And even at this point, when I meet people socially, they ask me, when will this stop, the absolute amount of money coming into the market? And I don't really have an answer. I think if you look at the absolute numbers that are coming through, we're looking at $38.7 billion of net year-to-date, calendar year-to-date, of domestic money coming into mutual funds. That's about net $5 billion a month. So that is obviously a staggering number. We've never seen this before. It's 41 consecutive months of net inflows coming into the market. If you look at the additions, last month alone, we added 2.3 million new registered investors. And that takes the absolute number to beyond 100 million. So I think the financialization of the Indian equity markets is growing at a pace that none of us have seen before. And frankly, I don't think any of us are educated enough now to comment on when this is going to slow down.
Gautam, hi. Good to have you on the show. So, yeah, the inflows are extremely strong, domestic inflows, even if FIIs continue to be, fence-sitters. The question really is now, I think, is, what to buy? Where should you be deploying additional money, right? Because the best things are definitely not coming cheap in this market. So how are you navigating this for all the additional money that you're getting?
Yeah, that's a fair question, and that's a question we ask ourselves literally every day. So here's my answer to that, Surbi. The fact is, if you look at the top 1,200 stocks, and we run these screens every so often, 400 stocks, believe it or not, and this is as of Friday's close, 400 of the 1,200 stocks of the top 1,200 stocks of India, 400 have fallen 20% or more from their respective 52-week highs. I.e., there is opportunity, out there. Doesn't mean they're all necessarily buys, but the fact is, if you dig hard enough, you'll find stocks to buy. But the reality is, if I were to generalize, the market is invariably still very expensive. And, whether you look at cement, whether you look at auto, whether you look at the metal space, everything's expensive. So it's very hard to actually generalize with respect to sectors. But if you dig deeper and find individual stocks that have been beaten up, now they could be beaten up for a variety of reasons. But like I said, if there's a turnaround happening in a specific sector or a stock, I think that's the time to focus on. The second thing I would focus on will be newer sectors. And again, very few ways to play them. For example, solar, data centers becoming a gigantic business in this country. We're currently just sub 1 gigawatt of data center capacity. It's going up to 4 gigawatts in the next 3 years. So a lot of opportunity there, not just for the data center companies, but companies and vendors that supply into the data center space. Again, very few listed ways to play it, but I think you will see more companies emerging, IPOing, and I would say save your money for opportunities like that.
Hi, Gautam. Good morning. Good to see you, Ben. We have discussed about the EV plays in the past, and you're quite excited about that theme. What do you make of the new listing? Did you all participate, Ola Electric?
No, we didn't. We kind of missed that, and obviously post-market move of the stock was remarkable. So we kind of missed that. But the fact is, again, that may be the only pure play at this point of time. And that's probably one of the reasons the market's giving it this valuation. So I think as more companies get listed, you will see, hopefully, some of that valuation cooling off.
Okay, all right. The other theme that you liked is, so what are the other alternate plays then to the EV space, if you have any names? And the other theme that you all have latched on to was, I think, EMS. Sigma, right. Something that you all had. Do you think things have ran a little ahead of themselves at current reckoning? I think you all were in early. So would you add at these levels or would you avoid it?
You've raised a fair point on the EMS space. You've seen one segment of the EMS space, which is Dixon, Amber, and Peugeot Electroplast that done phenomenally well. They're trading at, Dixon's at about 80 times FY26 PE. The other two are about 45 to 50 times. But if you look at if you look at the other companies which are not in the more assembly line, but more in the value-added products, the only one that's really done well in terms of first quarter earnings has been Keynes. The others haven't done as well in terms of earnings growth. So you've seen a better top-line growth for a lot of these companies, including Sigma, as you mentioned, but hasn't flown through as yet in the profits. So I think there could be opportunities there if you have a longer-term view.
NIIT Limited is up 20% now. That's limit up on very large volumes. I just want to sort of make a quick mention. It's the biggest volume-led gainer right now. So 154 on NIIT Limited at this point in time. So interesting. Angel One is coming up with a 5. It was not there in the mix in the morning when we started. So it's 5% higher. Stock's back at about 2,700, Angel One. So about 380,000 shares on it. Yeah, 380 on the NSE. Kaplan Point is up about 6.5%. These are all sort of newer and newer names. Kaplan Point is up 1859. There was news last week for Kaplan. Markson's Pharma is up about 5% right now. So that's another one. Quick Heal, you may want to look at it. 4% higher, 640 on Quick Heal at this stage. So yeah, I mean there's a lot happening as far as individual names are concerned. Gautam, you want to talk about sort of single stock opportunities if you have any? We've got the broader overall view, but there are always opportunities, right? Anything you want to highlight?
You just brought up Angel One, and given the fact that the stocks had a 31% correction from its 52-week high, that was as of Friday, and now you mentioned the stocks are 4%. So I suspect that there are stocks out there where people are thinking, should I be owning something that's gone up 2x in the last 12 to 18 months? Maybe a book profit there and come into something that's fallen. So I'm sure there are others like me running screens and figuring out stocks which are attractive.
By the way, along with Angel One, even Motilal is having a great morning. For Motilal, the added sort of news flow is that the FTSE index inclusion names this as one of the stocks on their all-world index. So that's Motilal Oswal having a pretty good morning for itself for the time being. Godfrey Phillips is on the move as well, 5% up on Godfrey Phillips. Hunasa's gain is now increasing to about 7.5%. So plenty of movers in the market this morning. Hunasa sort of brings me to some of the so-called new age companies or platform companies, Gautam. And we've seen what's happened, right? We've seen what happened with Zomato. But the problem is when people start extrapolating the same thesis for every single company, and they forget that each company is different. Now, I don't know if that was one of the reasons why Ola also did what it did, though it was a loss-making company. It is a loss-making company as we look at it right now. But in the whole so-called new age basket, what are you convinced on?
We still like Zomato a lot, and I think the fact is Blinkit is starting to outshine the core Zomato food delivery business. So quick commerce has taken off in a major way, and I think with the 45% market share, we're banking on Zomato as a way to play the quick commerce space. So we like that a lot. But I think so we bring up an interesting point, because when Zomato or PB Fintech or Paytm, when they first initially listed, even Nykaa for that matter, the stocks had a major correction. I think the feeling at the time was that what's the point of buying a stock that's just about EBITDA positive or will be EBITDA positive at some point in the future when and these are trading at multiples on revenue, or not even revenue, sometimes ARR. So the private equity world and the public market world, I think valuation metrics were very different. And that's the reason they had those initial corrections. But interestingly, now the Indian equity markets are being more patient with the new age technology companies, just the way the US markets were patient with companies like Amazon, which for the longest time made losses, but see the wealth creation that's happened. So I think same thing applies to the new age tech companies. And I think they've come a full circle in terms of now being appreciated as companies that will create huge wealth over the next 5 to 10 years.
Well, does it bother you, Gautam? It just got me thinking as I was hearing you, reply. There's been a lot of chatter around government policy with respect to quick commerce, right? I don't know if you caught the minister's comments last week, Mr. Piyush Goyal, and then, there's been this whole e-commerce policy that's been in the cold storage for the longest time. Maybe it sees the light of the day. Could that be any sort of a dampener? And beyond Zomato, what are the other businesses, if not stocks, but the kind of other businesses that you will watch out for, since you're positive on the space overall?
No, you're right. The minister did make a comment on quick commerce and the fact that it's potentially going to impact the Kirana stores. But, here's the thing. The model of a quick commerce is twofold. One is you could actually have your own dark stores and a mother warehouse sitting outside the major city and replenishing the dark stores. And that's your delivery model. Or you could actually even do the delivery much the same way as Zomato does food delivery. You could do grocery delivery from the Kirana store, which helps the Kirana store instead. So maybe the total number of dark stores being added at this point of time may slow down. And some of these quick commerce platforms will actually deliver directly from the Kirana store to your home. I suspect that may end up happening if the government takes some actions. Secondly, as I said earlier, I think renewables, data centers, and the two are oddly enough linked, will be businesses of the future. And that's really, I think, where you'll see more listings coming over the next few years.
All right, Gautam, always a pleasure having you on the show. Thanks a lot for joining in, giving us your view. Looking forward to having a chat with you in the time to come. But as you said, there are pockets where you see there is some attractiveness, but otherwise there are other sectors where, in fact, we are seeing some bit of elevated valuations as well. Let's focus on the next company. We have Finolex Industries. That's the one on our radar. In Q1, the company witnessed weak volumes, but the PVC resin witnessed strong revenue growth. Also, the Finance Ministry over the weekend has imposed definitive anti-dumping duty on CPVC imports from China as well as South Korea. What's the outlook from here on? Well, we're joined by Mr. Venkatraman, the MD of Finolex Industries. Hi, Mr. Venkatraman. Good morning, and thanks a lot for joining us here on CNBC TV18. Let's get this recent ADD news first out of the way on CPVC resin. As a percentage of your total mix, how much is CPVC pipes as a percentage? I believe it's low single digits. Could you clarify?
Yeah, it's about 8 to 10%.
8 to 10% of your mix. Now, on this part of your business, the input cost could potentially go up. How do you see this panning out? Will it be totally passed through? Because I don't think you're backward integrated on CPVC, or you could clarify on that front. And will it impact your business?
So most of our CPVC purchases are from India itself, so unlikely to be impacted.
Okay, so no impact on the CPVC part of the business. Got that. Mr. Venkatraman, let's focus on the other part of your business. You have given us a guidance in terms of volumes, I think, of around 12 to 15%. You could clarify on that point, which side is it drifting towards, the higher or the lower end? But that's more or less in line with what the industry is expected to grow. How do you see your market share panning out? Because there are competitors who are guiding for higher numbers. Clarify on the same.
So our guidance still goes from about 10 to 15%. The last quarter or the current quarter, Q2, which is typically on the lukewarm side because of the rains which we have received, but it's expected to pick up in Q3 and Q4.
But what about your market share, sir? If the entire industry is going to grow in this range itself, will you lose some market share?
So it should be a steady market share gain, because we are also having gains in terms of our non-agri segment has been growing quite significantly above the market numbers. So we expect that segment to be growing faster than our agri segment.
You have a rough number about what is your market share currently in the agri and the non-agri space?
It's very difficult to say that, because there is no central agency which collects that information. Therefore, it is very difficult to say quote the market share numbers at the moment.
But you have a rough number, sir?
No, it's difficult to say. As I mentioned, it's difficult to say because there's nobody collecting the information centrally.
Okay. Mr. Venkatraman, I just want to go back to the differential between CPVC and PVC, because one of the notes that we were going through, analyst notes, points out that now, because of this anti-dumping duty, perhaps the input for the raw material CPVC, the minor increase in maybe pricing. But on the other hand, PVC prices have been coming down apparently. So perhaps there's going to be a larger differential between PVC pipes and CPVC pipes. Now that's an analyst theory. Tell us if that's what you're seeing on ground. And just give us the mix for you and the pipes business. How much is still PVC? How much is CPVC? And what are the different trends? Just tell us the volume expectation and what the mix is going to be between these two segments.
So CPVC pipes are essentially used for hot and cold water, and SPVC pipes have got a much wider application. And therefore, in our product mix, as I mentioned, CPVC is about 8 to 10%. And yes, people importing from China and Korea are likely to see an increase in price. We procure most of our CPVC locally, and therefore will not be much impacted by this ADD which has come in. In terms of growth, both segments, CPVC is mainly falls under the non-agri segment, and CPVC segment typically grows at the plumbing and sanitation, the rate at which the plumbing and sanitation segments grow. And overall, if you see, agri typically grows anywhere between 5 and 9%, and the non-agri segment has been growing about 15% in line with the building and construction segment.
But sir, what about the pricing on the PVC side? Is it true that pricing there has been coming down substantially? And therefore, what's the projection on that part of the business?
So we have seen volatility in the PVC pricing. The prices did go up all the way up to $900, $920 per metric ton. It has come down to about $820 per metric ton. The if you look at the overall last 10-year average, the pricing is anywhere between $750 and $800 per metric ton. So it is inching more closer to the steady state in the last 10 years. And this is something which, as an industry, everybody likes a more stable price so that it is not, the overall demand is not hampered by the price movement.
And is the fall in pricing for PVC, is that a pass-through, or do you retain any amount of benefit?
So
in terms of margin
in this market, piping and plumbing and sanitation segment, or in the pipes and fitting segment, is fairly efficient. The moment the price increases or price decreases, it is passed on to the market within a couple of days.
Okay, all right. Mr. Venkatraman, let's focus a little bit on business in both your two segments, that's in pipes as well as in resins. What is the EBIT per kg, and how do you see in both these two segments it panning out?
So if you look at Q1, our price per EBIT per kg was approximately 14.85 rupees per kg. This has seen an upward movement for us, especially due to the product mix change. We have been focusing much more on the plumbing and sanitation segment, which has got higher margin. When you look at the resin segment, if you look at the last 10-year average, it is approximately about 13 to 15 rupees per kg. And that is something which is a steady state, but it does see a lot of volatility based on the PVC prices.
And you said the EBIT per kg in the pipes business was 14.8, but that has moved up. Moved up to how much, and where do you see this?
If you look at it, say about 5 years back, it was in the 7 to 8 rupees per kg. And right now it has moved all the way up to about 14 to 15 rupees per kg.
And as the mix changes, do you think it can further move up from here?
No, it is about 15 to 16 is what we expect. And that is the range we are looking at in the next 1 to 2 years.
All right, you've given us a fair idea about the operational performance, but before, Surabhi, ask you some more questions on that front, I wanted to ask you about this buzz in the market. You would be speaking to the promoter entity quite a few times, and I think you know what I'm going to ask you. Is there any kind of resolution at the promoter level with Finolex Industries, Finolex Cables, some resolution on the cross-holding, something that the street should expect?
See, the management of the management team is fairly insulated from what is going on with the family, and therefore it doesn't have any impact on the day-to-day operations, and we don't get involved in the family matters.
That's right. It doesn't have any impact on the operations, sir, but some kind of resolution will be something that will be music to the ears of your investors. So they would like to know if it's heading in that direction. A resolution at the promoter level will be good news. Even sorting out this cross-holding will be very, very good news.
So we, as I mentioned, as management team, we don't get involved with the family business.
All right. Mr. Venkatraman, just one last question. What is capacity utilization at? Is it still around in the 60 zone, or has it moved up?
60 is in the 60 to 70%, depending upon the time of the year.
Okay.
Yeah.
All right.
Okay, so finally, as we wind up the conversation, now I'm talking about the big numbers at the blended full year company level. Can you give us a sense of the top line growth that you see ahead for FY25 and this stupendous margin expansion that we saw in the first quarter, whether that's sustainable, and what are you targeting in terms of full year margins?
See, in terms of top line, it is going to be very difficult to predict. It is completely going to be dependent upon the about the PVC prices, and therefore it will be a difficult one to predict. In terms of margins, we expect anywhere between 12 and 15, which is we had a good first quarter. Second quarter has been lukewarm, and we expect that the third and fourth quarter it should be picking up. And at this point of time, we are looking at a volume growth of approximately 10% to 15%.
Okay. All right. You've maintained that for a while. Mr. Venkatraman, thank you very much. Good speaking with you. Appreciate you joining in with some of that perspective. That's Finolex with sort of, an outlook as far as the industry is concerned. Stocks absolutely flat. Well, there was a news flash. We should put that back on. That's a chunky, large order. I mean, I think, 10, 15 years ago, it used to be, these large power orders, tens of thousands of crores, which BHEL used to get to set up, to supply equipment for setting up large supercritical power projects on the thermal side. And of course, there was a big slump. And now I think I saw an order from Adani Power, which essentially is to the tune of 11,000 crores. This is according to agencies, which is coming through. The stock in focus should be, of course, BHEL. If we'll see if that is actually moving up at all. The company receiving the order, of course, is BHEL. There's a sharp spike higher as we speak. That's a chunky material order. I think maybe I'm mistaken, or maybe I don't remember, but I think one of the largest orders that BHEL has received in the recent past. So absolutely the sector which continues to add a lot of capacity both on the thermal side and the renewables side as well, and of course the entire supply chain, equipment supplies, transformers, everything. I mean, that space has done very, very well. But we'll come back to this with more details. Vivek is now joining us with the Nifty and FTSE changes which are expected, and of course the implications for flows. Vivek, morning again.
Well, good morning. That's right. First up, like we had flagged off during trading session on Friday, a couple of important updates over there. NSE indices, you saw the index reconstitution, multiple ins and outs. We'll focus on the ones that are material. And along with that, post-market hours on Friday, you also saw FTSE semi-annual index review, where there are almost 13 additions to the FTSE All-World Index. Now, first let's talk about the NSE indices. Adjustments, remember, will take place on September 27, 2024. The estimated flows are from IIFL Alternative Research. So which are the stocks that have entered the Nifty? Bharat Electronics as well as Trent. Bharat Electronics will see inflows of close to $461 million on the back of that. Trend close to $645 million. On the other hand, the exclusions, Divi Labs and LTI Mindtree will see outflows of close to $260 and $221 million respectively. The Nifty Bank Index, Canara Bank comes in, almost $80 million of flows. Bandhan Bank exits and it will see outflows of close to $40 million. Now coming to FTSE, remember overall this particular rebalance will lead to inflows in India of close to $1 billion. Adjustments will take place on September 20th, 2024. Effective thereby from September 23rd. 13 additions to the FTSE All-World Index, key amongst them being Bank of Maharashtra, Central Bank of India, Cochin Shipyard, Endurance Technologies, Escorts Kubota, GE T&D, as well as Hitachi India. These are migrations from, the earlier one to the All-World Index. Hutco, IRB, KEI, Lloyds Metal, as well as Motilal Oswal. Some of these stocks, in fact, today are reacting quite sharply, including Motilal Oswal. Along with that, FTSE also has gone ahead and announced 48 additions to the FTSE All-Cap Index, and there have been no deletions from FTSE this time around, so it's a net inflow event of close to $1 billion. So again, some inflows coming in from the passive index front as well.
All right, that's very exhaustive, Vivek. Thank you very much. Vivek, you want to weigh in on that BHEL order?
Orders have been coming in for BHEL. Even last week, there was a news flow that the company had received an order worth almost 16,000 crore, or has emerged as L1, yet to receive the order. The order book currently very strong, over 1 lakh crore. So BHEL, order inflow is very strong.
Absolutely, the big daddy when it comes to capital goods with respect to the power space. Vivek, thank you very much for that. Well, let's just go back to the big story that we have been trying to analyze and address this morning, which is this anti-dumping duty that's come through on CPVC. And this is, of course, with respect to imports coming in from Korea as well as China. To talk about the impact, we have with us Praveen Sahai, Vice President Institutional Research at Prabhudas Lilladher. Praveen, good to have you on. We were just discussing this with one of the companies which is in the chain, Phenolics Industries. Now, they were saying that for them, CPVC is not too much in terms of volumes. It's about 8-9%, so it doesn't have much of an impact. But I read your note as well. What you're saying is that, number one, I think China and Korea are no longer the major sources of imports now. It's more Thailand. So maybe the impact is limited. But just give us a sense on, in terms of stock impact, whatever little price increase we see, if at all we see any price increase, how should we read it at a stock level, at a company level in India?
Yeah, thank you for having me in your channel. So firstly, this recommendation of continuation in the anti-dumping duty has come on 25th May 24, and now it's implemented 26th August. So this is a better version, I can say, this extension from the last 5-year what the anti-dumping duty on the Chinese and the Korean CPVC resin. The one thing, this is based on the manufacturing origin. So now they can't route through the different countries. So it's a blanket from a $593 to $792 anti-dumping duty, which will ultimately increase the prices for the domestic CPVC pipe manufacturers. So in the range of around 35 to 40 rupees. And in that, it looks like beneficial for the organized players like a Astral or Asirvad, who has a large contribution of a CPVC resin or CPVC pipe in their portfolio. Then next is your Prince or a Supreme. They have also a good contribution from the CPVC pipes. So they are going to get the benefit in terms of gaining a market share, because these anti-dumping duty will going to impact the smaller or the regional players more as compared to these players. So
no, Praveen, just explain that point, because you're saying that there's likely to be a small impact. I mean, some increase in local CPVC pricing, but perhaps that gets passed on. So how is it that you expect the larger pipe players to actually benefit? Because I'm guessing, at least on the CPVC pipe side, we should see some increase in pricing. How much would that increase be? And then therefore, if you could explain the point.
Yes, so as I said, that there is a slight increase of around 35 to 40 rupees per kg. And with these also, large players have ability to pass on the prices. So, and in the scenario where the PVC resin prices were going down, so whenever there is a widening of a differential between the PVC and the CPVC pipes, it's become a difficult for a smaller player to go through with the CPVC piping. So ultimately, this is a gain for the market share gain for the large players.
Got it. Okay. Okay. Got it. So just in terms of stocks, which are the major beneficiaries? Astral, you said, Prince, any of the other, the resin manufacturers, if there's any impact there?
Yeah, so I was coming to that. So some of the resin manufacturers, the large resin manufacturers were DCW, Epicral, Lubrizol. So they are the large manufacturers domestically, and they are also increasing their capacities. So they are also going to get a benefit, because right now of our total consumption, around 73% imported. So with these, anti-dumping duty, definitely the domestic manufacturers of CPVC resin going to get benefit. And also we all know that Grasim is coming with a huge capacity in this segment. So ultimately the way forward, the domestic manufacturers will get the benefit of this. But also I need to highlight that the import from the Thailand and the Japan and even from the US right now is on the higher side. So ultimate benefit from this anti-dumping duty on the Korea and China is quite limited.
Okay. All right, Praveen, got that. Thank you very much for joining in. That's helpful perspective. Appreciate you being with us on the show today. By the way, you're seeing some commentary from the RBI governor at the bottom of your screen. He is speaking at the Global Conference on Digital Public Infrastructure and Emerging Technologies. Therefore, is of course talking about the rapid tech transformation that is sweeping through the Indian banking landscape. We'll get you more on that in a bit. But right now, we do need to head into a quick break. Come back on the other side, and of course, our corporate conversations will continue. We'll connect with N. Kamakodi, MD and CEO at City Union Bank, to talk about the bank's business outlook.
Okay, welcome back. 150 points higher. So this is a good-looking market. And we are 160 points, actually. So 24,974. Essentially 120, 130 points more. And you're at all-time highs, which should basically be at 25,078. That's the last high. So very, very close to it now, matter of a few percentage points. Let's focus on City Union Bank now. Their first quarter business momentum was weak. Deposits declined. Advances saw muted growth. Sequentially, margins also fell. Mr. N. Kamakodi is MD and CEO at City Union Bank. Mr. Kamakodi, good morning. Great to have you with us here. Thank you very much. Prashant this side. Now, we are, of course, we should talk about what Q2 is looking like, right? Q1 is now in a way, a bit of a distant memory. Has business momentum
Prashant,
picked up materially in Q2? Could you start? Yeah, go on.
Prashant, actually, we see it as a 10% growth point to point. And normally, we used to have a negative first quarter, but this is the first quarter which is positive after almost 7-8 years. So the things have got well, and our ROIs have crossed 1.5, and our overall the PAT growth was about 16%, and overall the first quarter growth was indeed, like I said, the momentum has actually set in. We in fact, we typically used to have about 15% growth till the December 2022, and the calendar year 23 was not a good year for us, and there was like say some sort of like say layback, and things started improving from there onwards, and it has already crossed 10% for that. And we are able to see the overall business proceeding in this direction without compromising much on the profitability metrics is what we have been seeing.
Mr. Kamakodi, good to have you on. So the hottest talking point when you're talking to a banker these days is the whole issue on deposits, the fight for deposits. What is the experience that you're having, and what projections do you have? Because I think when we spoke to you after you declared numbers, first quarter numbers, you were expecting growth to touch double digits. So what is the gap between deposit growth for you this year projected and the loan growth that you're forecasting?
Basically, we have already crossed like a double digit in the Q1 itself, and things are progressing in a stable and steady fashion. You have like say this sort of like over a period of multiple cycles which you have seen, there always used to be some amount of a movement, like say the gap between the deposit growth and advances growth. Like say sometimes deposit growth overtakes advances, and sometimes advances growth overtakes deposits, and some amount of incremental focus into the like say the mutual fund industry perhaps like say created this amount of debate, and we are all working for that. At the same time, you also hear the reports sent by like say SBI, which is perhaps talking that like this amount of discussion is perhaps a little bit overstretched on the realities of that. Yes, we are conscious about it, and so far we are not seeing a stage where our deposit growth rate will be limited by the deposit growth rate, and we have enough buffer with us, and we are also like every other bank trying to work out our like say strategies, expecting things that are expected to be.
Sir, can you share some numbers on the CASA ratio that you're hoping to maintain, and what is the deposit mobilization target for this year? I mean, there must be some rough range you have in mind.
Basically, the overall CASA growth, like say, we had like say always had like say in the lower quartile in terms of the CASA percentage right from the beginning, and the last 7-8 years, the CASA percentage has in fact increased from lower 20s to about 30%, which is a substantial improvement which has happened in the last 5-6 years in a steady and a firm manner. We are expecting to like say go ahead with the same amount of numbers in terms of percentage CASA. We expect the like say overall credit growth of the system to be around mid-teens, and we also hope to achieve and aligned with the growth rate of the system. And we also have our like say main mode of liability side had been the retail term deposits, which had been our main source of numbers, and we are seeing things as per our expectations, and we don't expect the deposit growth to inhibit the credit growth for the next 4 to 6 quarters going on.
So just to clarify, when you said mid-teens, that's the expectation on deposit growth or credit growth?
Credit growth and sufficient deposit growth to take care of that.
Okay, mid-teens credit growth. Got it. Just give us a second, sir. We're looking at a new listing, and it's a big one, 45% higher on Interarch. That's the new listing, and we're getting visuals from the NSE on this. So the momentum on Primary Street continues.
Well, that's right. Happy faces. Welcome to the stock market to the entire team. And keep in mind that we'll have the management for us in the next 30 minutes here on CNBC-TV18. So stay tuned for that listing. For the time being, rocket up, more than 40% returns. Well, Mr. Kamakodi, good morning. Nigel on this side, and good to have you on the show, sir. Let's focus on your new business. New business as a percentage of the mix, what is it currently? And how do you see this business scaling up? Point number one. Point number two is, margins, I think, were in that vicinity. NIMs were at around 3.5% for the past quarter. What's the range we should work with?
Basically, if you had a chance to look into our net interest margin over, let's say, a decade or so, our range had been between 3.4 to 3.7. We are very much on the upper range. For about 7 to 8 quarters, we are 4% plus, which got subdued for one of the main reasons is that, like, some of the, let's say, penal interest and all overdues need to be started with getting at your charges, which impacted about over 10 to 15 basis point reduction and all. In that, we are currently our long-term average range of 3.4 to 3.7, which we expect that range will continue for the future. We mainly, like, our monthly, let's say, disbursement is to the range of about let's say 1,000 crore to 1,100 crore, which is getting set. And normally the let's say we are in the second half used to typically take care of about 60% of our incremental business. And the one good thing is that we have not seen positive momentum in the first quarter, which we have seen positive growth in our loan book after maybe close to 780.
Okay. So just very quickly, quick last point on asset quality. You've actually shown a small improvement sequentially. We were talking to one of the other gold financiers, one of the NBFCs, and they have seen some delay in payment. So just trying to check, and there's also that showing up in the MFI vertical. So just wanted to know if you are seeing any concerns with respect to repayments in any of your lending groups.
Basically, as you know, we are like say bankers mainly for MSME, commercial trading, agriculture, and the gold loan, which together constitute about over 80% of our loan book. We are currently going through probably best of our asset quality cycles at let's say if you even look into the pre-COVID days, even the SMA2 numbers roughly used to be about 7.5% and about 2 to 2.5% slippage. Currently, those numbers are very much around even less than 3%, around 4.5%, and all. We are perhaps seeing the best of the overdue numbers, whatever I have seen in my maybe 15, 20 years of managing the.
Okay. All right. So thanks very much for joining in. Good to have you on, and appreciate you sharing all the perspective with us. Well, with that, let's quickly look at the market again, which continues to actually move on fairly steady ground. We've got about a 150-point rally going on the Nifty now. Shilpa Raut of Prabhudas Lilladhar is with us. Shilpa, thanks for joining in. So the bulls are having a good Monday. What's your advice on the index and individual stock trades?
Good morning, everyone. Definitely, bulls are very happy today, and this momentum that Nifty will touch 25,000 quite soon is actually happening today. And if we sustain this 25,000 mark, then a very strong short curving towards 25,300 levels cannot be ruled out. So I would say a little bit cautious here, but positively cautious, because it shows that likely will breach 25,000 and move ahead and upside towards 25,300. Talking about Bank Nifty also gave a good breakout, now sustaining above 51,150. It is a very positive level for the index. I believe from here 51,500 to 51,800 should be looked upon.
Okay, got it, Shilpa. Thank you very much for joining in and giving us some perspective on the market. By the way, I mean, beyond the index, are you trading any stocks, any individual calls as well?
Yes, definitely. IT definitely is a space today to be, there. So Naukri is one stock I believe has a very strong potential from here to test 7,800 from current zones. The stock trading at around 7,500 in futures, I believe, with a stop loss of 7,470. The same levels have recommended in Prabhudas Leela today as well. So I believe for intraday, you can definitely look towards 7,600 to 7,650. Positional traders can definitely stay intact till 7,800.
Okay, got it, Shilpa. Thanks very much. You have a good trading day and look forward to our next call. We'll take a break on that note. On the other side, all the commodity market action. We'll have Manisha joining in. Welcome back. It's time to talk commodities. We have Manisha with us. And Manisha, earlier in the morning, we were talking about the fall in the dollar, right? So you tell us now, how's it looking and what do you have your eye on at 10 a.m.?
Oh, well, yes, the dollar index declining all the way to 100 clearly has been supportive for many of these dollar-denominated commodities. And I'm looking at the crude oil prices right now because a very smart rebound from the lows of previous week is what we are working with right now. Last Monday, we were trading at an 8-month lows and almost nudging around that 74, 75 mark for Brent. And we are back around very close to $80 a barrel at this point in time. So while it was a gain of 2% on Friday, we're looking almost a percentage point of gain in the Asian markets right now as well. Various factors in play here, and I'll start with the geopolitics there, and that clearly was something over the weekend that the markets have taken cues from. So Israel and Hezbollah exchanging missile strikes over the weekend clearly has been supportive. There are concerns that this overall conflict within the Middle East perhaps could escalate going forward, and that is weighing onto the markets there. There also are supply risks going forward, and as I said, the West Asia is looking at a broader conflict at this point in time. Not just Israel and Hezbollah, but the kind of ceasefire conversation that we did see happen in Cairo, Egypt, also seems to be falling apart right now. There is no progress as of now towards Israel-Hamas ceasefire, and that's also adding some premium to the prices there. The markets also are looking at the U.S. Energy Department, which is buying a big chunk. We are looking at almost 47 million barrels of crude that the U.S. SPDR has bought, and this has been at an average price of around $76 there. The U.S. did sell almost 180 million barrels, and this was in the year 2022. That was just about when the Russia-Ukraine war had broken out. We did see crude oil prices, gasoline prices, heating oil, all of that go up. So with the U.S. SPDR also buying crude is something that the markets are taking in as the positive. The U.S. crude inventories is yet another factor, and a very sharp decline onto that one. 34 million barrels have seen a decline in last 8 weeks. So when you look at this number, this is the lowest in 2 years in sense of U.S. inventories there. Also, in the last 8 weeks, the kind of decline that we have seen has brought the crude inventories to the second largest lowest in a matter of last 10 average years there. Global markets also are looking at crude inventories constantly declining. If you look at the global markets here as well, in the advanced economies, that is, the crude inventories are now at the lowest by nearly 4% of a 10-year average. So various factors, as you can see, are supportive in case of crude oil prices there. An interesting report which is coming from Morgan Stanley, though, and the good news really ends there, because while there are supply risks and geopolitical tensions and the weakness in US dollar, which is supportive, but it really has to do with demand, which from China has been on the weaker side. The markets also are looking at a bit of a discount in some of those European countries as well. So Morgan Stanley, for one, says that the demand growth has been revised down to 1.1 million barrels per day for this year now. Also, the markets will watch out for the OPEC and allies meeting for the month of September. Remember, those voluntary output cuts that OPEC and allies have been giving in will start to ease off from the month of October, so the September meeting in that sense becomes very, very important. Another very important Morgan Stanley statement comes in suggesting that the crude prices from here on perhaps can see further decline. For the fourth quarter, they're looking at an average of $80, but for the next year, they anticipate 75 as an average for 2025. So next year perhaps could be a bearish crude oil prices, but at this point in time, we are looking at some support.
Okay, all right. Thank you very much for that wrap up. And of course, crude oil in focus. Manisha, thank you for that. We'll take a look at some of the stocks on the move now. Ekta is tracking Zydus Life, where it seems that one of the drugs that they manufacture, that could be coming in for stiffer competition. Ekta, fill us in.
Well, yes, definitely disappointing news which has come in for Zydus, but it was factored in, to be fair, because the street was anticipating competition to come in for Asacol HD. Now, Teva has received US FDA approval for this particular drug, which is used for ulcerative colitis. Remember that Zydus was the only generic in the market for a long time selling this drug, and it is estimated to account for around 3 to 5% of Zydus's revenue and 8 to 10% of the EBITDA in FY24. Now, Jeffrey says they assume the product contribution will drop to less than 1% of revenue and less than 3% of EBITDA in FY26. Sharp decline in earnings from new entrants in Asacol HD will reduce, according to them, because they have recent launches. Zydus has recent launches such as Mirabegron generic, which is basically a drug which is used for overactive bladders, increasing contribution from Revlimid generic, which is a cancer drug, and strong pipeline for launches in the US as well. So overall, they do believe that the competition is probably going to be negated, and the earnings estimate is going to be negated for them because of these other factors. Zydus is also looking to buy 50% in Sterling Biotech for 550 crores. Remember, it's one of the leading producers of pharma gelatin. FY24 revenue was around 455 odd crores. This particular company was acquired under NCLT by private equity investors. Now, post the acquisition, it's going to become a 50-50 JV for Zydus going forward. So I think the street is reacting to two pieces of news. Primarily, it would be Asacol HD, as well as the fact that 550 odd crores is what they're letting go of for Sterling Biotech.
All right. Okay, got it. Thank you very much, Ekta. On that note, we'll take a quick break. On the other side, our special segment, it's the economy. Lata, today we'll get chatting with Robert Suckin, global economist at Citi, to discuss all the details about Fed Chair Jerome Powell's comments at the Jackson Hole meeting, confirming that a rate cut indeed is coming in September.